Hey guys, what's going on? My name is Emmanuel Cook. I'm the founder and CEO of Synchrony AI. We're a investment research firm powered by AI. Today we're going to continue the Amazon DCF valuation that we started on Friday, and we will try to continue it and finish it today. Let's get started, guys. Okay, let's do this. Um, so come here. So the site is synchrony-ai.com. That is synchrony-ai.com. And we are over here now, guys. And yeah, let's try to do this. So we come to research and analysis, and we were working on the Amazon stock analysis. So let's continue. We scroll down, and there's a macro information. We don't want that one. We want the Amazon DCF model, so you guys can see. We click on that, and let's see. We're going to come and project. Let's work on financial projections now. Okay. I see why. We have 2024 and 2025, but we also have 2024 data that is not. Okay, that makes a lot of sense. I see. Um, yeah, try to. No, let's see. Come here. Um, let's say you don't know how to do financial projections. You can come here. What is the formula for financial projections in the DCF model? Formula is the current year. The current year revenue is equal to prior year times 1 plus the revenue growth rate. So the revenue growth rate. Okay, let's see. Let me write this down. Okay. All right, let's do this, guys. Now we're gonna come back here in the DCF model. We come to 1 plus. So say equals to the current year revenue is equal to the prior year revenue. Okay. Times in parentheses 1 plus the revenue growth rate. So the revenue growth rate, on average, let's say is 20%, for example. Let's say 0.2. That's 20%. So the revenue growth rate 0.2. Let's see. The next projections. Okay, 860,000 million So it's in thousands. So the revenue might be $860 billion, guys. That's pretty good. Okay, and then do the same formula, but okay. Um, this is 020, 020. Uh, oh, it's N20. Yeah, N20. Let's see. So if it continues to increase. Mm, Actually, maybe 20% is a little bit too much. If it grows at, let's say, 14%, let's see, 0.14. Okay, that's a little bit better. And then it continues to grow at 0.14. Yeah, there we go. It's pretty good. Pretty good stuff. Um, there's 020. Financial projections. Um, let's see. It's a little bit too much. Yeah. All right, guys. You know what we can do? We can take the average growth rate based on the yeah, the percent growth rate. So we can say um that's the economy growth rate here. So let's distinguish between these two. Um, yeah, let's just put U.S. growth rate for that one, and then we'll put Amazon growth rate. Okay, which is equals to the average of um, E21 to M21. Oh wow, it's 21% growth rate. But the 21% growth rate, is that really realistic? Because uh, sometimes the Amazon stock, it performed extremely well during COVID time, which is not really realistic with the other on average times that it's there, you know? But it did perform very well in 2017, 2018. But honestly, guys, I don't think that's super realistic for Amazon to do. You know, you turn this into a percentage. Um, yeah, it said the average growth rate is 20.7%. Uh, I honestly don't buy that. The larger the company, the slower the growth rate, right? So but we cannot take the average growth rate for Amazon within the past 10 years, which is 20.7, because we had COVID-19 happening, which really changed the growth rate for Amazon stock. And we also had very good stock market years as well. So personally, I don't think it will continue at that rate. Within the past 3 years, well, within the past 4 years, guys, the average growth rate has been about 11%. And so it will continue to slowly decline as the company gets larger and larger and larger. So personally, um, I could just take the average growth rate of the past, let's say 5 years, and then just use that average growth rate. And I think that would probably be around 13 or 14%. So let's just see. Um, yeah, the past 5 years, that would be 21. So it'll be I to, instead of E21, it'll be I21. Yeah, 13.3%. So if we do the financial projections for these, 13.3%. So 0.133. That's much more realistic for me, guys. You have to be very careful about using the average growth rate because it is not always representative of the actual changes. Yeah, because in the last 4 years, yeah, let's say in the last 4 years, the average growth rate has dropped by half, which is huge, So you guys have to be very, very wary of that, guys. Yeah, let's just continue these formulas here. I'm gonna copy this. Um, uh, this would be Q20, and then uh, 20. So now, guys, I'm just using the average growth rate of the past 5 years for Amazon stock to project the future revenues using that constant growth rate. You know, so yeah, that is how you do financial projections. And it's pretty easy to do, guys. We are still working on the application as well, so not everything is perfect right now. We are constantly improving it. We're constantly building it. So I truly believe that in the future, we will truly have something special. Is you. Uh, yeah, guys, my ultimate goal is to just build an application that investors and analysts can just continuously use to really speed up the investment research process and to give them an edge in the speed of creating research reports, collaboration, and various other things like that. We will continue to expand our features, our value offerings, and just create a really good investor and analyst community and just continuously bring new people along and things like that. But I'm super excited, guys. We will just continue to grow. We will continue to build. We will continue to use everything within our power, and we'll get feedback, and we will continue to reinvest and reinvent and just come up with really good ideas that are really good for people, guys. So yeah, yeah, guys, my team and I have to get to a certain point with this application where all of the formulas are already there. Everything is pretty much set up. The only thing that you guys will be able to, really change will be the things that are actually variable, right? Um, well, I mean, you guys can create your own DCF models and things like that, which is great, but to really speed up the overall uh, process and things like that, the formulas will be connected to each other, and the numbers will be connected to each other. So if you change one thing, everything else will change as well. And so, yeah, guys, we actually want this stuff to be really streamlined because from scratch, DCF models can take a very long time, probably like 3 or 4 hours, right? Because you have to use about 2 hours just to collect and structure the data, guys, just to read financial annual reports for the specific stock, and then you just put those numbers in, and then and just that process, it takes about 2 hours, and then you actually have to go back, use the financial formulas, and actually analyze everything, which can take a very long time as well. So we just want things to be super easy for investors and analysts to come on this platform, and everything should just be streamlined. Everything should be built in, created, and you guys can just go over there and do the final review and the final touch up as well. CFA stands for Certified Financial Analyst. It is a worldwide, very known exam that finance people can take. Either you're a finance professional or a finance student, you can take this exam and really get solidified in the finance material. And even for me, I am an investor as well, and I've had about 8 years in the financial markets. I've invested in foreign exchange. I have invested in stocks, stock options. I have some experience in futures trading as well. I have a lot of experience in commodities as well. The only thing I really don't have much knowledge in is real estate valuations and bond valuations. But everything else, I have some sort of understanding and experience in to provide more value for investors and analysts at the same time, guys. But anyways, this is the end of the video. We will continue this tomorrow and continue building this financial analysis report. So thank you guys very much, and I'll see you guys tomorrow.